Good evening, good morning, good night. We're watching this transmission. Tis I, Mike Martins, bringing another housing discussion article that's actually slipped through the cracks, and it's from Point to Homes. And these guys have been around, they're professional, they've been around, usually covering most international and U.S. Real estate news. They do Canada here and there. But this is a week and a half old. There's a week and 4 days old. I need to cover this article, guys, because this one here covers basically what we've been talking about on this channel for a good while now, and it's a good page to check out if you got some free time, and talks about mainly about the high risks and what's been driving up these asset bubbles and stuff like that. Canada, so this is by Christina Jisa, Jisa, and it's dated April 23rd, 2019. Canada replacing US as high-risk housing market. This is a big deal when you got news like this. A new report by International Monetary Fund, IMF, found that Canada's housing market has grown riskier over the last 2 years, but recent policy changes may help prevent this crisis. So we know what the recent policy changes are, so let's continue here. In its recent Global Financial Stability Report, the Washington-based IMF report that Canada has replaced the United States as the high-risk housing market, while lower household debt and cheaper home prices have lessened risk in the U.S., an influx of cash from foreign buyers has significantly increased the risk in Canada. So remember, we've been talking about the foreign money, Canada competing for rich investors, same thing with Australia, same thing with New Zealand, same thing with the UK. America, not too much. They're kind of tight on immigration. You know what Trump's stance is against immigration, and you know what's happening between China and the United States right now. The report significantly identified Toronto real estate and Vancouver real estate as overvalued, expressing concern from their similarity to the U.S. market in 2008 financial crisis. I'm going to actually beg to differ on this one because I was living in Miami in 2006, like just around this time. And let me tell you guys, the average condo went from $56,000 to $120,000. The average house went from let's say $210,000 to $500,000. Unlike Vancouver, where the average, like a detached bungalow built in 1910, was going for, it started in 0506 at about $660, and around 2016, early 2017, it was around the tail end of $2.4 million. So, yes, not as overvalued as the US was, because we're talking 16 to 20 times your average income to afford in Vancouver and in parts of Toronto or the GTA. So let's make sure we clear that up here a bit, okay? In Miami, for example, the $400,000 house went $200,000 over value, where the house in Vancouver is $1 million and change over value. So you got to kind of keep that in perspective. However, the report also found that rent increases in foreign buyer taxes and tightened mortgage regulation may keep the situation from escalating. Foreign buyers driving up risk. In some cases, investment by foreign entities can benefit housing markets. For example, foreign real estate trusts buying apartment buildings can promote stability, but according to the report, foreign individuals buying individual homes seems to be associated with higher house prices in short term and more downside risk house prices in the medium term in advanced economies. Generally, Vancouver has the strongest reputation for attracting foreign buyers, yet the report found that Calgary real estate markets has been destabilizing by foreign purchases than Vancouver's. Apparently, that may be tied to the boom and bust cycles of Alberta's oil industry. Now, again, in Vancouver, the difference is they would have shows for condo sales in China, in Shanghai or Beijing, to buy in Vancouver. So if you wanted to buy one of these towers or buy into one of these, a condo in one of these towers, you would actually have to go to Shanghai to see the layouts and to see the fake, the plastic building, the demonstration they put there, and people picking out units. It wasn't, and they were making fun of us, saying that Canadians can't even afford to buy in there. I think a lot of Canadians that were smart didn't buy into the bullcrap. Possible solution: provincial governments in Toronto, Vancouver areas have introduced foreign buyers tax. That, according to the IMF, may alleviate over-evaluation pressure and thereby reduce risk. Vancouver originally introduced a 15% tax on residential properties purchased by foreign nationals in July 2016. In February 2018, the government increased the rate to 20% and expanded the tax reach to include the Fraser Valley Capital Regional District, Nanaimo Regional District, and Central Okanagan. Another solution the report recommended is tightening regulations related to how much money homebuyers can borrow relative to their income. Macroprudential measures reduce risk by forcing homebuyers to apply for mortgages that are more within their means. So there's a lot of people applying for mortgages that are 16 times to 18 to 24 times their income. Believe me, I've seen it. And in Portland, Oregon, it's already past 4 times the average income and everyone's leaving, right? So I've seen cities all over the U.S. and Canada, in the U.K. and Australia and New Zealand, all the English-speaking countries. This is the same phenomena. You know what I'm saying? The method was recently employed in Canada's banking regulator, the Office of Superintendent Financial Institution, OSFI, who created mortgage stress test. The test effectively requires borrowers to qualify for a mortgage rate of 2% higher than the mortgage applied for. So they'll stress test you to see if the rates were to go up 2 percentage points, what would happen? Can you afford the payments, right? Most Canadians can't. So now there's a lot of people not securing financing, so they're going to be lenders, right? Despite the IMF report's findings that such limitations reduce risk in the housing market and mortgage stress test led to widespread comment among residential real estate professionals. For them, the tightening rules reduced their customer base by forcing some would-be buyers out of the market. A study at RateHub found that before the stress test, the average home buyer in Toronto qualified for a purchase of 43% of listed homes. But now with the stress test, the study found that the same buyers qualified to purchase only 20%. Numerous industry groups called for the government to loosen or eliminate the stress tests, arguing that it contributes to a growing household affordability crisis. Now, here's the deal. One major thing that actually rampantly raised the property values in Canada to huge balloon asset levels that unseen before is the amount of money laundering that was dumped in. The money that was laundered into Canada was just dumped into real estate and shadow flipping with neighbors and other friends overseas and buying back the same property. There's some people 14 times purchased the same house back and forth to clean several million, if not billion, in Canada. So they didn't mention this in here, which I'm very surprised, but the money laundering is just phenomenal. So they want to eliminate the stress test. In late 2018, the Royal Bank of Canada, RBC Economics, found that housing affordability levels were at their worst point in almost 30 years. The RBC report concluded that high interest rates led to families with an average income in Vancouver spending a shocking 88.4% of their income on housing. Okay, so there's people like in states like Chicago that are spending 36% of their income on housing, and the government and are freaking out on that. Oh wow, 36% of your income is going towards your living expenses. Oh my goodness. Well, let's look at what's happening right now in Vancouver. 88.4 points. It's 3 times what some states start freaking out in the States. Aid from the government. In response to the complaints by residential real estate industry, the federal government is developing a first-time home buyers incentive program. This is a nightmare. They did this before. They're doing it again. They've done it in Australia. They've done it. I don't think they've done it. Yeah, they've done it in New Zealand. They've done it in UK. The UK is the best. In London, we'll give you 100% loan to value, 0 down, sound right here if you qualify. That's how bad things are in London. In response to the complaints, the residential real estate industry, the federal government is developing a first-time home buyers incentive program. The goal of the program is to reduce buyers' monthly mortgage payments by having Canada's government run a mortgage insurer, Canada Mortgage and Housing Corporation, CMHC, buy stake in the homes. The CMHC would eventually recover this money when the home is sold. Scheduled to launch in the fall, the program could have a side effect slowing the market until the time when it comes into effect. Current buyers may choose to wait a few more months until they could benefit from the government's help. You got to pay this back. I think it's interest free, but then you got to, there's lots going on with that guy's stuff. You, like I say on this channel, guys, I don't give financial advice, but I do recommend you do your own research and don't leave it to anybody else but yourself. The CMHC says the program will likely only raise home prices by a fraction of a percentage point. They only argue that helping first-time home buyers purchase their homes will free up rental openings. They say should also ease pressure on rents. So I'm not finding anywhere. I'm having a really tough time trying to find stories on people underwater. There's a lot of people emailing me that they are underwater. They're having a tough time making ends meet. And this is not I don't know, guys. It's a very well written article. It gets to the point, what's happening, what we're looking forward to in the fall. But what I recommend, guys, is to really do your due diligence and do your own research, because remember, the biggest asset you'll ever buy in your life is a house, second to a car. And I strongly recommend that when you're going to pretty much put your life savings and your life work and the place you're going to call home for a good while, especially if you're buying to raise a family, make sure you do your research, people. Anyways, guys, Mike Martins here reporting. And guys, if you do want to support the transmission, you can by sharing a video. I really appreciate that, guys, that you do that for me. And let me know what you guys think in the comments below. Canada's replacing the U.S. in high-risk housing market. The U.S. did not have it this bad. Yeah, they had mortgage-backed securities that went bad and stuff like that. But Canada sold out pretty much a lot of its middle and working poor class. Let me know. Comment below.